Welcome back to XRP Update, everyone. I hope you're all having an amazing day wherever you're tuning in from. We've got a massive, highly critical discussion lined up today because let's be totally honest with ourselves. There is a ton of noise, confusion, and flat-out panic flooding the crypto market right now. I'm looking at Twitter, Reddit, and YouTube comments, and I'm seeing the exact same question popping up everywhere. Is it time to cut losses and get out, or is something way bigger happening behind the scenes? Today, we're breaking down XRP, Ripple, and the macro crypto market. Plus, we're diving deep into the latest surrounding the Clarity Act and looking at why some of the biggest banking giants in America aren't actually threatening the future of blockchain. They might actually be proving it right. If you like staying ahead of the curve and keeping track of real facts instead of emotional hype, do me a massive favor. Hit that like button, subscribe, and let your voice be heard in the comments below. Let's get into it. Look, the market has been testing everyone's patience lately. There's no point in denying it. When prices pull back or consolidate for weeks, logic completely goes out the window and raw human emotions take over. Fear starts taking over the timeline, headlines get incredibly negative, and suddenly you start second-guessing decisions you felt 100% confident about just a few months ago. But if financial history tells us anything, it's that the biggest opportunities usually show up right when everyone else is ready to throw in the towel and walk away. That's why we need to have this reality check today. It's funny how fast the vibe changes in crypto. Think about it. When prices are pumping, everyone's a genius. Social media gets absolutely flooded with to-the-moon predictions, price targets of $50, and endless excitement. But the second the market cools off, total radio silence. Suddenly, those same voices disappear and the narrative flips entirely to risk, danger, and failure. We're seeing that exact script play out right now. XRP is sitting significantly below where most investors expected it to be by this point in time. And because of that, anxiety is spreading. But this is exactly where retail investors lose their edge. They focus on the red candles on the screen while completely ignoring the actual building blocks being laid down in the background. If you take a step back and look at the macro view, the actual foundation of blockchain adoption hasn't slowed down by a single inch. Big institutions are still building. Governments are still actively debating regulations. Developers are still upgrading networks. And most importantly, the world's largest financial players are quietly getting heavily involved in tokenization. Take a look at the recent headlines regarding major U.S. banks. News just broke that institutions like JPMorgan, Citigroup, and other multi-trillion-dollar banking organizations are actively exploring and developing tokenized deposit systems. Now, right on cue, some people in the crypto community panicked. They immediately assumed that if banks are creating their own blockchain-based solutions, it means public digital assets like XRP are losing their relevance. But that interpretation completely misses the forest for the trees. For years, critics and skeptics said blockchain was a joke. They argued it had zero real-world utility and that Wall Street would never touch it. Fast forward to today, and the most powerful banks on the planet are literally building their future payment infrastructure on blockchain technology. That's not a threat to our space, it's ultimate validation. The debate is no longer about if blockchain will be used in global finance. That battle is won. The conversation now is about how fast it's going to scale and who is going to capture the most value during that transition. People always look at competition in this space as a bad thing, but in emerging industries, competition is exactly what accelerates innovation. It forces companies to improve their products, lower costs, and build more secure systems. We saw this exact same pattern with the early internet. We saw it with mobile phones, and we're seeing it with artificial intelligence right now. Blockchain is no different. When the heavy hitters enter the room, they bring massive resources, enterprise-grade infrastructure, and institutional legitimacy. Their very presence forces regulators to sit up, stop dragging their feet, and actually create clear rules. So, big banks moving into tokenized settlements doesn't hurt the digital asset space. It legitimizes it. It makes it impossible for any politician or critic to claim this technology is just a temporary trend or a passing fad. And this is exactly why the long-term strategy Ripple has played for years is so fascinating to watch unfold. While hundreds of other crypto projects were chasing retail hype, marketing meme coins, and looking for quick gains, Ripple was grinding away in the background. They spent years building relationships with enterprise-level financial institutions, central banks, and regulators worldwide. Let's be real, it wasn't a flashy strategy. It didn't satisfy investors who wanted immediate overnight results. It required a ridiculous amount of patience. But look at the board now. The entire traditional financial world is suddenly obsessed with tokenization, cross-border settlement, and digital asset integration. That sounds a whole lot like the exact future Ripple has been pitching and preparing for since day one. And we're seeing major moves on the utility side right now to support this. Look at Ripple's stablecoin ecosystem, specifically RLUSD. Recent reports highlighted that RLUSD is expanding its interoperability, making it much easier to move value seamlessly across different blockchain environments. This matters immensely because fragmentation has always been one of the biggest bottlenecks for blockchain adoption. If different blockchains operate like isolated islands that can't talk to each other, global finance can't use them. Solving this cross-chain problem might not generate the same instant retail hype as a dramatic price pump, but it represents genuine structural progress. Long-term value in this market will be driven by utility, not blind speculation. While that's happening under the hood, the technological progress is being matched by major shifts on the regulatory side, specifically the discussions surrounding the Clarity Act and broader market structure legislation. For nearly a decade, the single biggest roadblock for the digital asset industry in America has been regulatory ambiguity. Companies wanted clear rules, investors wanted protection, and developers wanted to know what was legal. The confusion kept institutional capital sitting on the sidelines. That's why the legislative push we're seeing right now is so critical. Clear frameworks create confidence, and confidence brings in billions of dollars in investment. Congressman French Hill recently hit on these exact themes, pointing out that banks are preparing to compete aggressively in this new environment. Notice his phrasing. They aren't trying to fight blockchain innovation anymore. They are trying to leverage it. There is a massive, historic difference between trying to kill an innovation and trying to adapt to it. Banks know that consumer expectations have shifted. Businesses are demanding 24/7, near-instant cross-border settlements. Legacy banking infrastructure that shuts down over the weekend simply cannot survive in a global digital economy. The debate around stablecoins, how they're structured, who backs them, and whether they should pay yield, is still going to take time to iron out in Congress. But the broader takeaway is undeniable. Policymakers are no longer ignoring this. Even small community banks are entering the conversation because they realize if they don't adapt to tokenization, they're going to be left behind. So, if you're an XRP investor, the single most important takeaway from today's video is learning how to separate short-term market noise from long-term structural development. Prices are always going to bounce around. Sentiment will flip from euphoric to terrified in a matter of days. Negative headlines will try to scare you into making emotional decisions. But underneath all of that surface-level chaos, the plumbing of the global financial system is actively being rebuilt. The biggest banks are investing in blockchain technology. Congress is moving closer to regulatory clarity. Stablecoin frameworks are maturing. Cross-chain interoperability is expanding. And the XRP Ledger is continuously being upgraded to stay ahead of the competition. These foundational milestones don't always cause an immediate green candle on the price chart, but they are building the bedrock for the future. Next time you see a sensationalized headline asking whether it's time to panic and sell everything, take a breath, step back, and look at the whole chessboard. XRP remains right at the center of the global conversation around institutional payments and financial modernization. The coming months are going to be absolutely vital for both regulatory clarity and actual enterprise adoption. As always, stay informed, stay patient, and keep your eyes focused firmly on the big picture, because the story unfolding around XRP and the future of finance is far from over. Thank you so much for watching today's XRP update. Don't forget to smash that like button and subscribe if you haven't already. Take care, and I will see you guys in the very next video.